Welcome in, ladies and gentlemen. You are now joining Tarby Bryant on the guest list. This is a conversation that I'm looking forward. As you guys know, I'm an avid crypto investor. I went through the startup route twice, so a man of this stature. Tarby is the founder, or the chairman and CEO of Sweetwater Capital, and the founder and CEO of the Gathering of Angels. The Gathering of Angels is a group that's been around for over 20 years, which encompasses multiple angel investors, investment bankers, and helps fund seed rounds from the low point of 25,000 to upwards of 30 million, I believe. And Sweetwater Capital is providing executive leadership with full accountability for operation aspects of private equity. Tarby, thank you for coming on.
My pleasure. Glad to be here today.
Yeah, exactly. As we were talking before, I know you're a little bit short on time. So without further ado, let's build some context for the listeners. Let's just give us a little 5-minute description of your background, growing up, and how you got into this gigantic investment in angel investing space.
Sure, I'd be pleased to. I grew up in Atlanta, Georgia, and spent most of my young life there. Went to a prep school there, off to Davidson College in North Carolina with a BA in economics, and went through ROTC. So I had opportunity to be an officer, and chose the intelligence branch, and got commissioned as a U.S. Army intelligence officer, thinking I was going to go to Germany. That was on my list, and the Presidio in California was second, and somewhere in Texas was third. Well, I ended up in Vietnam, so that none of my first choices got picked, but had a good tour of duty in Vietnam, in Saigon at the Intelligence Center, and also on the Cambodian border. When I came back, I went back to graduate school at Georgia State University and got an MBA in finance with high honors, and then started making investments, both corporately as well as in real estate. And in 1990, my dad passed away, and I moved to Santa Fe, New Mexico, where I had wanted to live earlier, and started working with the principal investigators at Los Alamos, the national laboratory where the smartest people in the world are aggregated. And my job was to try to help them start young businesses with lab technologies called commercialization. And in 1996, I realized pretty clearly that once these young companies got funded, that they would leave the state, because the venture capital funds that came in once a year for a big conference down in Albuquerque would say, Jake, I love your company, I love the technology, but I want you close to where we are. So you'll need to move to the Silicon Valley, and instead of paying $300,000 for that house, it'll cost you $1.5 million. But you'll make it up in stock. And realized that New Mexico did not have an angel group. And I'd read about a group in California called the Band of Angels, run by Dr. Hans Severance, and copied and modeled what I wanted to do after what he had done in the Silicon Valley. And he was bringing young companies together over a dinner in Palo Alto or in Atherton. And I wanted to do the same thing, and did actually in Santa Fe. So in October of 1996, I started at the El Dorado Hotel, having angel investors come, and companies coming out of Los Alamos as the presenters originally, and then spread it all over the country. And so in 2000, I went back to Atlanta, my hometown, and started it there. Did it over the next 8 years in 12 different cities across the United States. Washington, D.C., Charlotte, North Carolina, Jacksonville, Hilton Head Island, South Carolina, Atlanta, Scottsdale, Austin, Houston, Dallas, and 3 cities in California. So I was on the road a lot, organizing angel meetings in each of those different cities every month, and getting a lot of funding. And then the recession hit in 08 and 09. My wife got ill and eventually passed away in 12. And so I couldn't really travel as much during that time period, and did it only in Santa Fe and Atlanta. And then decided to do the face-to-face meetings really up until I moved to Austin in 18. Our adult children and the baby were there, so Mama wanted to go to the baby, and I'm okay with wherever I have to go, because at that point I was doing a lot of work online and with Zoom early in the meeting, and the governor of Texas said you can't have face-to-face meetings. This was March of last year when COVID arrived in the country and arrived in Texas in a big way. And so I realized that I was going to have to do my meetings on Zoom, a platform that I had used, for the last 2 or 3 years, just in conversation, and found a tech guy to help me put the meetings on. So since March of last year, I've been doing meetings just all online as we are today, and having companies come from all over the country to make presentations. No, they don't have to fly into Austin or into Las Vegas to attend a meeting and present. They do it online from their house or home office or wherever they can get online. And I have angel investors now that come from all over the country to the meetings that were friends during the years when we had face-to-face meetings. So on a particular event date like March the 10th, which is my next meeting, I'll have angel investors come from Washington. I have 2 or 3 from South Carolina. I have about 150 people on my list from Atlanta, 160 people from Austin, Texas, and several from here in Las Vegas and Henderson, several from Scottsdale in California. So they all come to the meetings complimentary. They hear from usually 3 young companies that make presentations. Example would be March the 10th, where my first presenter is from Miami, Florida. It's a company that does human intelligence, HR, sort of assessments, and helps a CEO and a board basically understand the strengths and weaknesses of their management team, of their board, of their customers. And so Juan Betancourt will be our first presenter. Our second presenter is called Unicorn Beverage, which is a startup novel energy drink called Unicorn. And they're out of Wilmington, Delaware, the home of our current president. So they'll be presenting in the number 2 spot. And then the number 3 presenter is from here in Las Vegas. And they're in the health insurance business. So I have 3 young companies each time. They make 15-minute Jake presentations. I have usually spent, 10 to 15 hours of my time preparing them for the presentation, helping them with their executive summary, helping them with their PowerPoint presentation. And then probably the most valuable thing is that I think I bring to the table, I call it my unfair competitive advantage. For 8 years, I taught corporate finance in New Mexico, and my specialty was valuation, which is really the art of the deal. Donald Trump wrote a book about that, but valuation for young companies is critical when you're raising money. You need to know how much of the company you're going to give away to an investor when he or she puts in $250,000. What percentage of the company does that buy? So they get a valuation using discounted cash flow. I use a 40% internal rate of return and an industry multiple price earnings ratio to give me the future value. And so they present at the Gathering of Angels on Zoom now for 15 minutes uninterrupted, followed by 2 to 5 minutes of Q&A. And then after that, is the time. We have about 10 minutes for the evaluation sheets. So all of the angel investors now digitally online evaluate, Jake's company based on understanding the business model, like the management team, the financial projections are reasonable and achievable. It's unique and different and disruptive technology, yes or no. And then they circle an investment amount, and then they circle how they'd like to be followed up with. So the presenting entrepreneur presents usually to 25 to 35 people. We had 38 in the room in January 27th when I had my meeting. We'll not do one in February because of ice and sleet and snow in Georgia and certainly in Austin. They're finally getting electricity back today and water back tomorrow. So, they've been kind of like, camping out, melting snow for drinking water. So it's a good process. And as you noted, I've done over 400 fundings since I started the Gathering of Angels in Santa Fe. And, it's wonderful process, I think, for both the entrepreneurs like you. If you have a startup business and you're looking for money and, you've exhausted all your savings and friends and family don't return the calls, your call anymore for help or money or both. And eventually you got to find an angel investor, somebody that you don't know predominantly, and that you've got to convince them that you've got an investable opportunity and that they can put money in today and get their money out tomorrow and not end up having to go to the bankruptcy court to get a liquidation. So that's kind of how the process works. It's fun. It's good stimulation for me. And it's a wonderful opportunity for angel investors to see early, before the young companies get to the investment bankers or get to the venture capitalists who basically take, preferred stock, and they take a lot more of the interest in the company, but the valuations are lower at this early stage. So
right. So
that's how it works.
It's angel investing is a beautiful concept, especially in today's world where the majority of entrepreneurs are younger and they're beginning to start at younger ages because of the internet and the accessibility to information. But the problem is always the capital. But in terms of angel investing, what would you say are the main differences or advantages of having an angel investor versus a venture capital firm and devote their capital to your company?
Well, at the young startup stage, after friends and families and fools, they call it FF&F, after those three, after you've exhausted your savings, your savings account is minus zero. You've got 6 credit cards that are at their max limit. Most venture capital funds do not invest at the early stage. Because 2 or 3 reasons. The risk of failure is higher, one, and it's labor intensive. I would comment to you that, coaching a person that is young, that's not been to the rodeo before, and that has a small team, maybe, but maybe just a sole entrepreneur, as you might be, it takes a lot of effort from somebody. Either a newly minted MBA or somebody that's been doing it for 50 years now. For me, I started my first business when I was 7, so I've been playing the role of the entrepreneur for a long time and really enjoy it. So it's not as much work, it's more fun for me to help a young company to say, send me your business plan. I will read it quickly. I will look at your executive summary, look at your financial statements in an Excel box to see if they're reasonable. If you don't have a valuation, I will help you do that. And then I have a model executive summary that I drop people into. I have a model 12 to 20 slide PowerPoint presentation and some guidelines to basically help you make sure you hit all the angel investor hot buttons. But a venture capital person, I would say that 90% of the VC firms that are out there are later stage. They just don't want to deal with, somebody that has just started the business or maybe has, 10 paying customers, maybe has 3 people on the management team, not 10. And they just say, well, you're too early for us. And they'll drag you along for a while. And then finally say no. Most of them do. There are a few that will go down at the early stage, not seed stage, but early stage, and they will tell you clearly that it is more labor intensive. There's a lot more guidance, building the management team, strengthening the financials, developing channel partners to get things done, getting additional customers, and raising the valuation. All of that takes 1 to 3 years usually. And it's a process that most venture capital folks just don't want to play in that sandbox. And so the angel investor kind of fills the gap between friends and families and fools and personal savings and venture capitalists, and then eventually go on to an IPO if it's novel and disruptive enough, or do a reverse merger, like a lot of them are doing. One of the firms that we found $400,000 for in November was a SPAC, a special purpose acquisition company out of Atlanta, run by one of my Atlanta angels. Gary Teplis is the CEO, had a pretty good board, but he went out and raised, $65, $70 million in a blank check company, and is out looking for a company to merge with in the travel technology space. He's a corporate travel guy, Teplis corporate travel. And so the process is changing. Crowdfunding has increase the opportunity for young companies to get money. There's a really good website now called Start Engine that is, I guess, Mr. Wonderful is their spokesperson. I've invested some in some of those young companies at really small amounts in some of them. And then some of those companies on Start Engine have presented at my gathering of angels for January. I had 2. One, Nightscope, Bill Santana Lee was the presenter. And then Joshua Rinkin with a drone company called Parallel Flight out of California presented at my gathering of angels. And both of those got money, as well as a software company out of Austin called Sanity Desk that got money. So of the 3 companies that presented January the 27th, all 3 of them got money, which was, 3 more success stories for the gathering of angels. And the more of those I have, the more opportunities I have to help people. And angel investors, don't put all their eggs in one basket. They shouldn't. I encourage them not to do that. If they really like Jake's company and they want to put, $2 or $3 million into Jake and that's all they have, that's probably not a good investment. But put some money with Jake, put some money with Bill, put some money with Joshua in different sort of space, and hopefully watch those baskets, a series of diversification baskets. And that's really what I do when I invest in the stock market. I'm not all in 5G or in lithium. I've got, semiconductor stocks. I've got home building stocks like D.R. Horton. And I'm putting money in different places. So when the different sectors move, I'll be the beneficiary of that. So,
right. That's a smart thesis. There's a famous quote by, I think it was Mark Cuban, where he says that billionaires or millionaires diversify, billionaires concentrate, and it's good to diversify to protect your funds. That's a lot of times in a capitalist society, it's easier to attain funds and it's harder to protect them, right? Because you tend to disperse it. But in terms of your specific or maybe a general angel investor thesis, since you said you are the bridge between the triple F and the venture capital firms, you're definitely more in line and in contact with the investor. Is it more important for when you're investing in a very early stage startup, the business plan, or are there certain characteristics or traits and qualities that you look for in a founder where you believe that this person can get the job done no matter what the business plan is?
I would say it's probably the latter. Is my first concentration is the CEO and the team that he or she has around them. And how strong is the board of advisors, and do they listen? Not all of us are, trainable and malleable enough where you can take advice and act on it. The business plan is important and critical. When people say, Tarby, I've got a great idea, can you give me a 30-minute, window and let's talk about it? I will say, as I did last night to this presenter that sent me hit my website, said, I'd like to have a half an hour, 45 minutes with you. I said, well, send me your business plan first, and I will be more than happy to have a conversation after that. So I like to read the plan quickly. I like to see if it makes sense. I like to take a look at, how long and strong and seasoned the management team is that's going to execute. Because, a business plan is not a bound book that never changes. It really should be a 3-ring binder or digitized so you can make changes in it on a daily basis. Because, things change on the way to the forum. Management teams evolve, and they either get stronger or they get weaker based on the CEO's, ability to hire people and to scale the company. And try to, I look now to see how disruptive the technology is that the company is offering. Is it different? Is it just another, fast casual restaurant? Or is it just another healthcare provider of the 600,000 that are across the country? And what's different about, the unicorn beverage that makes it something that would be appealing to the consumer, has a large and scalable market, but the management team and the advisors are priority one in my book. And I look at that first and second, third. Then I look at the business plan and the industry that they're in, and then the financials, because they are hypothecated. They are, schemed and dreamed up, because that's all projections are. But there has to be some basis for that. You can't just, punch in an Excel times 6 and it goes out, like that. So that doesn't really work. And then the exit strategy. How does the investor get his or her money back in a reasonable time period? And if they say, well, I'm not interested in I want to keep this. This is my lifetime dream. And I did some consulting, as I said, up at Los Alamos, and I had lunch one day with a group that had a technology. I'll just use a book here. It was about like this. Okay, this was a small box that was in front of a nuclear warhead. Okay, on one of the nukes that they work on up at Los Alamos, called EPIC. Well, there's two couples, and they were very smart. They all lived in Los Alamos. They were all in their, mid-50s, I'll say, early 60s. Had 6 PhDs in nuclear physics and math and all the different higher technology stuff. And they said, Tarby, please come up and have lunch with us. We're looking for $600,000. I said, sure, I'll come up. I live living in Santa Fe, come up the road 19 miles. Had lunch at Ashley at the motel, and went around and they said, well, we're looking for $600,000. I said, well, the cheapest capital for you would be debt, and you could go and borrow a second mortgage on your house and come up with $600,000 because you own your houses free and clear, as most of the lab people do. So they don't have a first mortgage. And go see Los Alamos National Bank. Bill Enlow, chairman, is a friend, and get a second mortgage and do it that way. He said, oh, no, Mr. Bryant, you don't understand. We don't borrow money. I said, okay. Let's look at equity. Let's look at that side of the balance sheet. And I said, well, what's the corporate structure? He said, well, we each own 25%. I said, well, you got to sell some of that equity if you're going to raise $600,000. Oh, no, Mr. Bryant, you don't understand. We don't share it with anybody. We each own 25% and we're not sharing it. I said, okay. What do you want from me? He said, we want you to give us a grant. I said, well, angel investors don't do grants. They make investments. So the point is that as smart as some people are, and these people are brilliant, all four of them, is that, they have to understand what the rules of the road are for angel investors who are not like Uncle George, who will put money into your venture and he really doesn't have to get it back. Angel investors need to get that capital back so they can deploy it somewhere else, so they can take advantage of diversification and hopefully have an exit or two. Either the company is purchased or it goes public or, it's acquired by a major player in the industry. So it's an interesting process of education. I spend all of my day trying to teach entrepreneurs how to raise money, how to tell them that, what's missing in your puzzle. I read a business plan this morning, bright and early. It had 15 or 20 pages in it. It had one half page for the CEO, and there was nobody below him. You didn't have anybody else. So if Joe, not his name, but if Joe runs into a train or gets out on Warm Springs Road and somebody decides to sideswipe him and take him out, Tiger Woods rollover type stuff, the company is over unless you have key man insurance and you have a team around you and the show goes on. Having a strong management team. When the CEO of Marriott passes away from cancer, as he did last week after a long illness, there's a second and a third in command, and they're ready to step in and become the CEO, and they're trained, and they've been at Marriott for 25 years, as the new CEO has, and his style is the same way as Arnie Sorensen. So having a strong team, even at a startup level, or having advisors around you, good lawyers, good accountants, good people that you listen to, as young as you might be, you haven't been to 10 rodeos, you haven't been through 5 recessions, and surrounding yourself with people who have, that you listen to, that you respect, and that can give you good advice and advice you may not want to hear, but at least you'll take it into consideration. So the management team is really the high priority for me.
Is there an average time horizon for an expected return on investment when it comes to angel investing, or is it a case-by-case basis?
I try to coach and counsel my presenters to say it's a 3 to 5 year window, and that if you want to make this a vanity business and do it forever, and you don't want to pay back your investors for 10 years or never, I can't help you. So 3 to 5 years, I think, is a reasonable time frame. It's wonderful if it happens earlier. It often doesn't. But I think that having a structure where an angel investor can get a 40% internal rate of return, which is what I use when I do valuation. So that's per year. That's not over a 5-year period. It's not 10% a year. You can buy stocks in the market that will yield almost 9%. Iron Mountain is one of them that I'm involved in, a publicly traded company that does data storage and document storage. But it pays a dividend of 10%, and it's a publicly traded company, been around, got 18,000 employees. Why would I put money into Jake's startup business and just get a 10% return on my money? The answer is I probably wouldn't. But if you had something novel and you were unique and you were disruptive, you had a team around you, you had reasonable projections and an exit strategy for Tarby as an investor, you become appealing to me. And you might be so if I would put my money into a company, when I look at companies that want to present at my gathering of angels, I can't put money into all of them. I put money into 16 or 17 of them so far. And I've had 1 or 2 exits, and I got walking wounded, I call them. People that are, coming along, don't be patient. And it's only been 12 years since you put money into my company. Or we've gone bankrupt, which is what happens. We raised $1.6 million in one evening in Santa Fe for a company called VetMed Online. This is when veterinary pet-driven companies were going public in the early 2000 arena. And Dr. Larry Tilley was the CEO. Actually, I was the chairman. I had 5 dogs that he took care of for their cardiovascular problems. He was a cardiovascular veterinarian. And there are people like that are that specialized. And that was his uniqueness. He could deal with the heart problems of my Cavalier King Charles Spaniels. And so we raised $1.6 million one night at Sully Sombra, place there in Santa Fe. He wanted it all done in one check. And I made a contact for him in San Francisco, and David Horowitz and his VC fund put in $1.6 million, and I returned the checks to my angel investors. He merged with a company out of Atlanta, and a year and a half later went bankrupt. So, that one didn't quite work out as well, but my angel investors got taken out by the VC, who basically lost their money because they make money on 1 out of every 10. And it is a game of the odds. It's not like going to, the Green Valley Casino, but it is a risky business. And where there's risk, there has to be a high return. And I say 35 to 40% internal rate of return. And you got to figure out how you can get that money back to an investor, and do it in a reasonable, manner, and planned, and then execute. And then, if you need more money for another round, your early investors are usually the first people you're going to go see.
Right. So it's about taking calculated risk and leverage, and there's some of these other components to it that go into the evaluation process. One more quick question before we get out of here. Let's say the team that is presenting, they have what appears to be a well-crafted and structured team. It seems like their business plan is very intact. Are there any sort of emerging industries or technologies that are hot or catch your eye that maybe address some sort of specific, just some specific attention because maybe the returns or the industry is hot at that moment?
Well, industry hotness kind of varies from month to month, year to year, sometimes even day to day. I have invested in this year disruptive technologies and have them as presenters, and then have an investment portfolio for myself that are well, one's in the lithium space, one's in the 5G space, one's in the semiconductor space, which is, really a hot area, I think. And, all of the companies that I look at and put money into have something that's novel, and disruptive. It is a pure, game changer. It's not just, the same stuff over and over and over again. It's as profitable as McDonald's is. You can't just keep serving the same menu all the time. You've got to, they've got to get in and compete with Chick-fil-A on the chicken sandwich that Chick-fil-A is perfected. I'm telling you, and the service, the customer service component of Chick-fil-A is world class. What Horst Schultz did with Ritz-Carlton, bringing the service level in the hotel business. Predominantly 90% of your staff are minimum wage people, black and white, male, female, but they're making, today, $8 to $10 to $11 an hour. But they've got to be able to serve men and women as if they were kings and queens, and bring that high level of service. That's what differentiated Ritz-Carlton from all the different hotel chains. Now, Four Seasons copied that, and there are other specialty chains that have copied it. But Horst Schultz had something different. He found a guy named Bill Johnson who put up the money, and they created Ritz-Carlton, and eventually Marriott bought it, and Marriott controls that now. But it's you got to be disruptive, I think. You got to have a strong team that can execute a ever-changing business model, and that you got to surround yourself with people you listen to. If you're headstrong and don't take advice very easily because you think you're the smartest guy on the planet, you probably will have trouble with angel investing raising. It just, people who have money and have seasoned years of investing aren't perfect, and they realize that they're going to have to make investments in a whole series of companies to get some real winners. But if you don't take their advice, they'll stop writing checks for you. And they're not going to run the company for the CEO. That's unless you need them. I mean, you got a gap in you don't have a chief operating officer, or your strength is really not in finance. So you don't have a CFO, chief financial officer. Some of the angels often that are sitting at home, I've got one here on Warm Springs, just down the road from me, that's was with Ernst & Young for 25 or 30 years, retired, doesn't need the money. But, there's somebody that knows finance, is taking companies public, can be helpful. It's just connecting some of the dots and filling in the organizational chart where you really are a strong team, and that you can make money and not just, generate revenue. You know how to make a profit from the revenue sales. And that's the monetization that you and I talked about when we visited last time. So, having the ability to do something that's novel and unique, but also having the ability to make money at it, so you can pump that money back in or start paying yourself. Eventually you need to get the company in a profitable mode after a year or two. And some companies take longer, the drug companies, some of the, crazy speculation companies, GameStop and others, are not making any money. They never will. I know that AMC and all the movie people will come back, but I will bet you that 50% of the people who've gotten used to Netflix and, other platforms are going to watch their movies at home. And they don't have to go to a movie theater anymore, ever. So they're not coming back. I mean, so that's one of the industries that I think is kind of like the travel business. The travel agent business is dead. My sense is that, with the internet and all the different platforms, the real estate business may be the next industry that will struggle because, you do it all online. Why do I need Susie, the real estate agent, to show me the house when I can walk through it online and make a decision whether I like the house and check the neighborhood out and go straight to a title company? Why do I need to pay 6% to somebody that really doesn't provide any real service that I can't provide for myself?
Right. Yeah, I agree. Yeah. Real estate is definitely going to make a change. I actually had Mike Peregrino on here. He's the co-founder of Homey, which is made some moves down. It's the number one retail or residential real estate business in Utah. And now they've moved down here and they've gone through a few VC rounds. So they're definitely making some disruption. But Tarby, I do appreciate you for coming on. I always ask one same question to everyone on their way out. And the question is, what does Las Vegas mean to you?
Well, it's an exciting town. I'm not a casino gambler, but I do, gamble with startup companies. So from that perspective, I am, a gambling sort of individual. Our children moved here, and that's the reason that we came to Las Vegas. I've gotten involved in Rotary and the Chamber and several other organizations. We found our church. So I also believe in paying my civic rent in a city like Henderson, Las Vegas. So we've enjoyed the weather so far. I heard it gets a little hot during the summertime, but I'm prepared for that. I've been to Vietnam. So, having 100% humidity, we don't have that in Las Vegas. And I love the altitude. I walk on the golf course every morning at Wild Horse. So it's been a good experience. I've been here now 2.5 months and hopefully we'll have some more years ahead. But thank you very much for inviting me on, and I wish you great success.
Yeah, thank you so much, Tarby. Where do I send all of the listeners and viewers to learn more about the Gathering of Angels, follow yourself, or any other affiliate businesses that you'd like to know?
I would say go to the Gathering of Angels website. More about me is on the website, www.gatheringofangels.com. If you're an angel investor, you come complimentary to my meetings. If you're a potential presenter, you pay a nominal fee to present. But would love to have you register online at gatheringofangels.com.
Perfect. Your business is definitely going to be essential to Las Vegas and the growing entrepreneurial aspirations of the entire city and all the endeavors. I wish you the best. I know we'll stay in contact, and thank you for coming on.
Good. Thank you, Jake. I enjoyed our time together.
Thank you, Tarby. Thank you guys for listening, and we will catch you next time.